What happens when a government is broke? In this case, the Nigerian government. When its currency is failing and its people are losing faith. What happens? What happens is that it goes searching for new alternatives. And you know what? Your pockets may just be an option. The 2026 Finance Act isn't just another policy. It's a declaration. While some see it as an economic necessity, others see it as war against their finances. After years of trying to ban, block, and bully cryptocurrency, the Nigerian government has finally admitted defeat. They lost that particular battle to you, the crypto enthusiasts and digital investors. So now, they have regrouped, re-strategized, and relaunched a new battle. The battle for your digital wealth. Welcome back to Bank Smart Academy, where we cut through the noise and give you clear, actionable steps to protect and grow your wealth. My name is Chike, and in this video, we are not going to spread fear, neither are we going to give you illegal loopholes. What we are going to do is give you a calm, strategic, 3-step defense plan to navigate this new regulatory environment. And by the end of this video, you will have a clear understanding of what the law actually says, a strategy to secure your assets, and a roadmap for diversifying your portfolio and income streams. We have a lot to cover, so let's dive right in. Now, the 2026 tax law isn't just about regulation. This is a calculated, desperate revenue drive. The Nigerian government, seeing that hundreds of millions of dollars in value have been wisely moved by Nigerians into digital assets to escape the Naira decline, they want a piece of it. Today, we are not just going to tell you what the law says, we are going to expose the thinking behind it, and we are going to teach you how to create a safe space to protect what is rightfully yours. Now, let's connect the dots, because the timing is no accident. Why is the government suddenly so interested in regulating your crypto wallet in 2026? First, let's look at the big picture. Nigeria owes a lot of money and its debt profile at an all-time high. Our foreign reserves are strained, businesses are collapsing, and the hardship is biting. Tough times. The Naira is on a roller coaster that only seems to go down. The traditional tax base of crude oil and corporate taxes is under severe pressure. The government is scavenging for revenue wherever it can find it. Secondly, they finally realized they can't stop it. Yes, cryptocurrency is here to stay. The CBN's initial ban on bank transactions was a spectacular failure. It just pushed finance innovation underground and fueled the massive P2P market. A behemoth they could no longer control was created. What's their new strategy? If you can't beat them, tax them. Interesting. Now let's follow the money. Our debt servicing costs now swallow over 90% of our revenue. That is to say, we are not paying down the debt. We are just paying interest on the interest. The government is fiscally drowning, and it's looking for any lifeboat within reach. Your crypto portfolio, built with your own ingenuity, looks like the perfect fit. Anyway, notwithstanding this, we must look at the reasons government says it must be involved with your crypto transactions. 3 major factors the government considered or claimed to have considered are financial clarity, customer protection, and revenue generation. From a government policy perspective, the government's intentions, as stated, are threefold. First, to provide regulation, moving digital assets from a gray area into a defined space. Secondly, to enhance consumer protection, reducing the risk of fraud and market manipulation. And thirdly, to identify new revenue streams for national development. Is that so? We will find out. On the other side, from the standpoint of the crypto investor, while the government made their reasons clear, the practical implementation raises important questions. Many see this policy as a deliberate attempt not to put together a framework for innovation and job creation, but to gain absolute control, dipping their hands into the pockets of crypto investors, made up of mostly young Nigerians, and taking out a cut from their profits, in spite of terrible economic conditions which seem to continually erode the middle class, which they happen to fall under. This is serious, but relax. Bank Smart Academy is here to teach you how to navigate your way to protecting your digital assets, including your cryptocurrency, whilst being law-abiding citizens. Having listened to both sides of the argument, the central challenge lies in marrying a legacy regulatory system and a borderless, decentralized, innovative technology. There is a valid concern that one-size-fits-all approach could create unintended burdens for crypto investors and digital asset holders, which potentially slows the growth of a sector that holds significant promise for the Nigerian economy and for the pockets of young Nigerians. The gap between policy intent and practical implementation is where the real conversation needs to happen. This new tax situation requires a thoughtful strategy. And now, before we go into the most viable solutions for Nigerians who will soon be hit by the 2026 capital gains tax on digital assets, including cryptocurrency transactions, kindly take a moment to like this video, hit the subscribe button. Also, don't forget to tap the notification bell so you never miss our updates on navigating these financial ups and downs. Now, tax on digital assets, as the government would call it. Is it a deliberate, broad term? It could be. You're not just being taxed on Bitcoin, but on NFTs, tokenized real estate, even your in-game assets. The capital gains tax is just the hook, but the reporting requirements are the net. Now guess who the fish is? LOL. Your guess is as good as mine. They want a digital map for every transaction you make. This isn't just about revenue, it's about surveillance. While the government is trying to build a digital wall, our job is to show you how to either jump over or walk around it. So how do you contend with a government that wants a piece of your digital gold? You don't fight, you don't riot, you don't break the law, no. You just become smarter. You become a digital ghost in the machine. Your strategy is based on 3 pillars. Now, let's go. Step 1 in any crisis is to understand what you're actually dealing with. So let's decode the situation and replace fear with facts. The confusion stems from 2 main bodies: the Central Bank of Nigeria, CBN, and the Security and Exchange Commission, SEC. Their actions seem to contradict, but when you look closer, they tell a clear story. Do you remember the initial ban in 2021? The CBN's primary concern is the stability of the Naira and the banking system. Their directive essentially says Nigerian licensed banks cannot facilitate transactions for crypto exchanges. This is why you can't directly use your bank card on Binance anymore. They are protecting the financial system from what they see as volatile, unregulated flow of capital. What do they want? Control. Now let's look at SEC. While the CBN was slamming the door, the Security and Exchange Commission was trying to build a window. The SEC has actually published a framework for regulating digital assets. Their goal is not to ban crypto outright, but to bring it under their oversight. They are asking, how can we make this space safer for investors? How can we prevent fraud? Well, at least that's what they're saying. So how do you handle this as a crypto investor? Legitimate invincibility. Simply become a digital ghost. Simply owning cryptocurrency in a private wallet is not a crime. The government is not going to track you down for holding Bitcoin in your trust wallet, for example. What they are focused on is the movement of money between the traditional Naira system and the crypto system. The government targets operations of licensed, centralized exchanges that facilitate peer-to-peer trading with the Naira. The government is essentially trying to bring this massive, vibrant, informal economy, the crypto economy, to the spotlight so they can tax and monitor it. Now that we understand the issues, step 2 is to declare your digital freedom. This isn't about running away from crypto or the digital space. It's about making smart, calculated moves to reduce your risk and identify new opportunities. This pivot happens in 2 phases: securing your crypto and diversifying your assets. If a significant portion of your crypto is sitting on a centralized exchange like Binance, you are exposed to being taxed. The first move to make is to move a substantial portion of your assets to a non-custodial wallet. Think of it like this. Keeping your crypto on an exchange is like leaving your bags of gold in a bank vault in a foreign country you can't easily visit. Moving it to your own wallet is like bringing those gold bars into your own highly secure personal safe, where you control the keys. Examples include Trust Wallet, MetaMask, and Ledger or Trezor hardware wallets. We'll touch more on this in the next step. For those who need to convert crypto to Naira, the only real option is peer-to-peer, what you call P2P. But you must be smarter than ever. Use platforms with strong escrow services. Check the merchant's history, completion rates, and negative feedback, and be aware of the risks of dealing with unknown individuals. This is the single most powerful move you can make. Moving your crypto from an exchange like Binance to your own non-custodial wallet, a Trust Wallet, a MetaMask, a Ledger, is the digital equivalent of moving your money from a bank to a private Swiss vault. When your crypto is in your wallet, it is yours. No government can freeze it. No exchange can be forced to hand it over. This doesn't make you a criminal. It makes you a free individual. You are simply taking custody of your own property, which is your fundamental right. The government's ability to tax relies on them being able to see the transaction. A direct wallet-to-wallet transfer is like a private conversation. It's not broadcasted to the same easily monitored channels. You still need to cash out to Naira sometimes. This is where you are most visible. So, you must be strategic. Use P2P, but like a pro. Use multiple platforms, never large amounts with a single merchant, and space out your transactions. Consider Naira-less living. Can you pay for more things directly with crypto? Can you use crypto cards for international online shopping? The less you need to convert back to a failing currency, the less you expose yourself to their tax net. It's as simple as that. Surviving the 2026 tax grab is one thing, but truly winning means playing a longer game. The government is focusing on the symptom, crypto, but missing the disease, which is a shrinking economy. Your ultimate defense isn't just hiding your crypto, it's building a life and a portfolio that is globally marketable. Diversify into invincible assets. The 2026 law targets digital assets, right? Well, it's much harder for anyone to track or tax you on income from a remote job paid in US dollars into a Payoneer or Wise account. For example, it's harder for them to track your gains from investing in US stocks on an international platform. Let's be real. Many of you were in crypto for its growth potential. The good news is, there are other regulated vehicles that can help you build wealth. Money market funds and treasury bills. In a high inflation environment, preserving your capital is key. Platforms like Cowrywise, Piggyvest, and RiseVest offer easy access to money market funds and treasury bills that often yield 15 to 20% annually. It's not 100 times, but it's safe, stable, and Naira based. The other one is stocks. Look for companies on the Nigerian exchange that are resilient and pay good dividends. Think banks, consumer goods, and telecoms. Some even benefit from a weak Naira through their foreign earnings. Build skills, not just crypto bags. The most valuable asset you have is your mind. Invest in learning skills that the global market values. Become a digital exporter of services. Your US dollar income is your best shield against a Naira-based government. The goal is to make your Nigerian passport a detail of your birth, not a boundary for your wealth. Again, whilst the government is trying to build a digital wall, your job is to either jump over it or walk around it. So where does this leave us? The 2026 tax law is a turning point. It's the very moment the Nigerian government acknowledged it can no longer control the digital economy. So it has decided to parasite it. Excuse my words. Your response cannot be panic. It must be a calm, calculated, and deliberate reaction, a commitment to personal freedom. Your bank smart mandate is this: become invincible. That is, you must encrypt your records and hold your own keys. Think globally. That is, you must diversify your assets and your income streams beyond the Nigerian jurisdiction. Stay legitimate but smart. Use the tools available to you within the gray areas of the law. You are not evading. You are simply strategically complying in a way that protects your privacy. This is more than finance. It's a philosophy. It's about taking responsibility for your own future, because the system has shown it cannot be entirely trusted with it. If you believe in this vision of financial freedom, like this video, subscribe to Bank Smart Academy, and share this with every smart Nigerian you know. We need to stick together. The conversation is just starting. Tell me in the comments, what's the first step you're taking towards digital freedom? Don't forget to stay smart, stay safe, and stay free. See you in the next one. It's Bank Smart Academy. Thank you.